The Federal Reserve is finally considering cutting rates. After holding the rate steady for the whole year, it's spooked by the Bureau of Labor Statistics' unexpected weak job report, which added only 73,000 jobs in July. What's even worse is that it has revised down the May and June job data by a staggering 258,000 jobs. Now, it's almost certain that Fed will cut interest rate in the September Fed meeting. The only question is, how much will they cut? In this video, we're going to talk about exactly what happened, how Fed will respond, and exactly what you should do next. Let's talk more in detail about the July's job report. The July's job growth was 36% lower than the economists' forecast. 115,000 jobs were expected in July. That's 42,000 more than the actual number. And the real shock was the revisions. Jobs in May were slashed from 144,000 to just 19,000, and June's went from 147,000 to just 14,000. That's a combined record of 258,000 jobs that just vanished from the record. This is the biggest downward revision since 2020, and it suggests that the labor market has been weaker than we thought. The less than optimal job growth suggests that the stepped up US tariffs on the economic partners are weighing in on the labor market. The 3-month average job growth is now just 35,000, the lowest since the pandemic, and the near levels only seen in the previous recessions. If things continue, this could be a sign that we're heading into a recession. In July, the number of long-term unemployed, those who are jobless for 27 weeks or longer, has increased to 1.8 million. Under the hood, the healthcare and social assistance sections gained the most jobs in July. The government service had the decrease of 12,000 jobs, largely contributing to the Doge effect. The professional and business services, the white-collar jobs, suffered the most, with 14,000 jobs reduced in July. Trump's escalating trade policies is creating paralyzing uncertainty to our economy. The immigration crackdown is also reducing the labor supply, especially in the construction and agriculture sections. Many analysts believe that if things don't change, we will get even worse in the coming months and potentially pushing us into another recession, which is why many believed that Fed will finally cut interest rate in the September Fed meeting. Federal Reserve has two main jobs. Number one, keep inflation low, and number two, keep employment high. After the July job report, the chance of a rate cut shoot up to 80%. The data is too bad to ignore. The Fed cannot pretend the economy is strong anymore. The market is demanding a cut, which is why a 25 basis point cut is almost guaranteed in order to reverse some of the negative trend, and 2 more cuts are expected by end of December. Some even proposed a 50 basis point cut in September Fed meeting, which may put Fed in some kind of panic mode. So exactly what does this mean for you? Well, when Fed cuts interest rates, the savings accounts earn less interests, which mobilizes funds in those accounts into riskier assets. Assets such as stocks, crypto, and real estates. This will in turn boost people's confidence in spending, which in turn boost economy and create more jobs. The second major benefit to normal people will be lower mortgage rates. As borrowing becomes more affordable, a wave of potential buyers who were previously priced out will be incentivized to enter the market, effectively increasing demand. Conversely, existing homeowners who may have been locked into their current homes by the so-called golden handcuffs may now find it financially attractive to sell in order to upgrade or downsize, thereby boosting the supply of available homes. For you, this translates to an window of opportunity. Now is the ideal time to prepare your finances, check your credit score, and maybe get pre-approved in order to act decisively once the opportunity comes. Whether you want to purchase a new house or refinance your existing mortgage. But here's the catch. More funds chasing goods and services means higher prices. gas, groceries, rents, they could all jump again. Fed cutting rates may actually revive the inflation monster they have tried to slay for the past couple years. So make sure you diversify your investments. Hold some cash, but not all cash, in order to navigate the changing economic environments. Overall, we'll wait for the next Fed meeting to know which direction Fed is going to navigate. And before that, there is one more job report coming out in September 5th. And the next US inflation report is scheduled to come out on September 11th. Everyone is watching closely to these two reports to understand which direction the economy is heading. Thanks for watching. If you find this video helpful, please give it a thumbs up and subscribe. I will talk to you in the next video.